welcome. This is Tampa Home Talk, and it is a crisp, cool Friday, December the 16th. Welcome.
This isn't our last show of the year, is it?
No. I think we got a few more, and the holidays fall a little funky, so we may even be live for those. I'm not sure about that one yet.
This is okay. So
this will be my last show, and I won't be here next Friday.
We're surprised Adam is here this week.
We got to get Adam's top 10 list this week then.
Well, we're going to talk to Adam this week about the special session stuff as you know, there was a lot of stuff that happened.
Pass.
So we're going to talk about that.
I have opinions on the good and bad of that.
Can we get your top 10 list of the good and bad?
No, not yet. Not yet.
I can think of 10 things.
Hey, everything around this time of the year, this is Leo Kane with Beryl Engineering and Inspection. Everything around this time of the year needs to be a top 10 list.
Naughty or nice list. That's right.
Yeah, naughty or nice list. I mean, we got to do what the local news do because we are the local news.
And Tom Brubaker is in the house. Welcome back.
Good morning.
Tommy.
He's going to be talking about why an investor would want to buy a business in this market. That's coming up a little bit later in the show. Before we jump into that, I want to talk about the numbers this week, and also the Feds had another rate hike.
How much?
This week on Wednesday.
How much?
50 basis points.
Okay, at least it's lower than...
It's a little bit.
Lower than.
Yeah, I was saying maybe 75, but it was interesting. They had this little rate improvement. Remember we were talking about that last week? It actually was pretty good. But that's 50 basis points hike. It's going to be really good for savers. So if you've got some equity that you already pulled out of your house because you sold it, or you've got extra cash laying around that's just kind of been hanging out and not making you much money, now's the time to do it because this is going to be the best rate savers have seen since 2009. But maybe not so much for those of you that hold credit card balances. You know, those are going to be the highest they've been since 2007. And it's still a good time to buy. So the interesting thing we're seeing is people are waiting, right? They're waiting to see if they can get a better rate. And I don't think it's going to happen. I think they're going to be waiting for a while. So 2023, I think we're going to see a little bit of a shift in the market. So sellers are going to have to give up some of their equity to compensate for some of the higher rates. We're already seeing not only closing costs, but buy downs. Tom, you're probably seeing that. Also on your residential side, where they're buying the interest rate down either permanently or temporarily. And let's jump into the numbers real quick, and then a real quick little share from a CNBC market update. So new listings coming in at 609 this week.
Seems a little low.
Yeah, that's not a top 10.
And price decreases. They're not over 1,000 this week. They're at 960.
That's not a top 10 either.
61 very bold people going with price increases.
I know, those people are bold.
61. I have to say that's got to be an agent typo where they missed a zero or something. That's got to be.
That's a New York salsa right. kind of bold statement.
No, I don't know.
I think this market's going to get good. I better increase the price.
Right now, I don't know about you guys. I have seen, and I was talking to Tom before the show started. It has been a mad dash, it seems like, the past couple of weeks with people buying houses.
766 pending.
I've had a lot of new business quotes, people buying houses, that kind of stuff. Trying to close before the end of the year.
And think about that, right on point to make this point real fast. If they get a deed this year, they can get homestead exemption for next year.
Right.
If that deed rolls January 1st, they're not getting that homestead exemption until 2024. So if they're buying an investment property or something without homestead or something that's higher on the tax base and it's going to reduce, they want to try to cram that in there this year.
Right.
Now, on the flip side, if you know it's going to go up, wait till after January to close.
So, and the other flip side of that is
new builds don't get your CO till the end of the year because you'll be taxed on land next year too.
If I'm an investor and I don't want to do filing Schedule K-1s and I don't want to have all these extra taxes, I want to close before the end of the year so I don't have a 2023 tax year to worry about. Because the difference between closing in a 2-week period, if you roll into a new year, could be $3,000 or $4,000 in taxes that you have to pay accountants and stuff to do.
Definitely. And don't forget about prorations. I mean, for every month you wait, it's more money in prorated taxes. So there's a lot of little stack ups there. What were you going to say? You have that look. Like
no, I'm just looking. Don't look at me.
So, 23% of Americans think that real estate is still a great way to build wealth.
It is.
But only 12% bought in 2022. So, again, this
maybe
is
the other 11% bought last year.
I think that.
I think
they're waiting the sidelines.
Real estate's a great way to build wealth, and I didn't buy anything this year. So yeah, I mean, I'm surprised that the 23% isn't higher, and the 12% isn't lower.
I'm trying to think. I don't think I bought anything last year either.
Okay, so we're
Did I? I don't
we're
remember.
In this year,
Yeah, this
you
year.
almost started something.
This year,
and then you bought
2023.
that island thing.
Oh,
and
yeah, I
then-
did.
You did
Never
buy an
mind,
island.
I
You
did.
bought an
I
island.
did.
She bought an island.
I
So-
thought I didn't buy anything. I did.
Yeah, we inspected the island. We had James Holland out there inspecting an island
I forgot.
for you.
Yes, I did buy
He
it.
had
for
he
a-
had his like swamp shoes on. He had his little doom buggy.
Never mind. I'm not the 12%.
I remember you
I
started
remember
asking me the
12%.
question if it was insurable. I was like, no.
He's
no.
like, don't even go
I
any further.
can't.
We're
Nope.
not having this
Nope.
conversation.
So we've already destroyed the numbers because all four of us think.
I was just hoping for like a $25,000 deductible.
All four of us are in the
100%
23%.
deductible.
All four of us are in the 23%, and one of us is in the 12%. So that's 100% and 25%.
Yeah, look at us.
So we blew the numbers. We blew the
Listen.
numbers.
We're smarter than the average bear.
The rates are in like sixes, still right now, depending on your scenario, how much you're putting down your credit, all that jazz. And the lender will quote you your APR, not me. But I will tell you, I think that number is going to be higher in 2023. So if you need to get a loan and you don't have the ability to pay cash, I would not be waiting for the rates to get better.
And I don't know if this matters to it, like I'm sure it does, but how does when we talk about the interest rates and stuff going up, how does that affect auto loans? Same way?
It's all tied in. Yeah.
Yeah, it's the cost of money.
It's the cost of money, exactly. It's what
Now
banks
are auto
buy.
loans around the 6% right now
I don't
too?
know.
Is
Probably
Probably
anybody
higher.
shocked?
The short-term rates are usually
Probably,
higher than the
yeah.
long-term
They
rates.
I would agree
probably
with
are.
Tom on that one.
It's basically, like Leo said, it's the rate in which banks borrow money to relend. So that margin in between is how they make their money. Makes sense? They borrow
Yeah, so
money
I
from
would
the
see
feds.
I would see car loans also going up, short-term money.
Yeah, I think so
Good to know.
too. And it's interesting because there's still like this weird shortage with cars because of the whole supply chain chip things and like China shutting down the factory still every time someone gets COVID.
Well, here's the problem with the feds are raising rate to combat inflation. People are still spending.
Yes.
People are still spending.
Which is actually scary. I predict we're going to have record bankruptcies probably next year and into 2024.
I don't know. We got to be careful about these sweeping statements. We said there'd be
I'm
record
telling you.
foreclosures because of PACE, and that never happened.
No, I didn't say that. That was Mike Fasano.
And never happened.
I didn't say that, but that doesn't mean those aren't coming.
Never happened.
That's all part of that little inflation crunch that's still there. So those people just got their tax bills so that you would just start seeing that. Those defaults on... Yeah, it's too early to call
So
that.
you just called Mike Fasano out on the air.
No. I just said I don't think... And there will be some people that will lose their home.
And he's the
Because
Pasco
of the
County.
PACE.
We have to tell our listeners who he is. He's the Pasco County
Tax collector.
tax collector.
But here's the thing. People have equity right now. So why would they foreclose when they have equity? They're just going to sell. I mean, if they were smart, they would sell.
That is right.
And pay cash for something else that they can afford or something with a significant down payment. That would make sense, right? Not be tied into the PACE loan, but you're going to be paying that off when you close. Right? People have equity. That's why the foreclosures are less.
That's true.
So he could not have predicted what's happened in the last 2 years. No one could have. Remember?
We did.
No. 2 years ago, we were expecting a downturn.
We
Remember
have a
that?
downturn. We don't have a downturn that went below negative, but
It
we
was
have a downturn.
It was a 5-minute downturn, and then it went nuts. So it was not a downturn. Nobody can predict that. No one. I don't care who you are. You can't predict it. You cannot predict
It is our responsibility, and you are a team captain. You have to be able to predict and lead us to victory.
I'm going to tell you what I think based on my professional opinion, but at the end of the day, the truth is nobody knows. Nobody can time the market exactly. No one.
I haven't heard backpedaling like this since Tom Brady last week.
Oh, don't start with the Tom Brady thing on me. Supposedly there's a little headbutting going on with Byron Leftwich.
813-377-2775.
Don't get me started on
Call
football.
or text 813-377-2775.
Yeah, and it's a good time to consider buying real estate. I'm telling you, sellers.
When is a bad time to consider buying real? It's always a good time.
I think so too.
Yeah.
It's just the right opportunity, right? And Leo, you hang with a lot of investors. You go to the investor meetings, and one of the smartest things you'll ever hear most seasoned investors say is they may look at 50, 60, 100 deals before they move on one.
Oh,
right?
definitely.
So it's about buying the right one. It's not about not buying or trying to time the market. Right?
Yeah, no, I mean, if you can find a deal, you find a deal. You can find a deal in any market, and it's finding that deal and being patient.
And I think we're going to have some next
And that's
year.
what makes business brokering so difficult is it's all about finding the right deal.
Yep, that's
Absolutely.
true. And we're going to talk about that. So we're coming up right after the insurance special session here because they had one of those this week. And Adam's going to give us a rundown on what passed, what didn't, what to expect, what's coming up, and more. This is Tampa Home Talk. Stick around. We'll be back.
Welcome home. This is Leo Kane with Beryl Engineering and Inspection. I am pleased to introduce one of my top 10, Mr. Adam Talley here, to tell us about one of my lowest 10, which is an insurance discussion meeting that happened in Tallahassee. But anyway,
It
here's...
was a pretty big one.
Yeah.
Would you say it was in the top 10?
Yeah.
Okay, here's the top 10 of a top 10 of a bottom 10.
There's a lot of crazy stuff going on in the insurance world right now in Florida. And unless you've lived under a rock, you probably already noticed this.
Yeah.
And let's give a shout out to Joe for listening. He gets a little
Thanks,
irritated
Joe, for the advice, the tip.
He gets a little irritated. We talk over each other, but I think we just get excited to talk to each other and to talk to you guys.
I will admit. Sometimes if you don't step in, you won't get to talk. So you need to with this group.
Here's
That's
the problem, though. I mean, if you're listening and you're skimming the radio channels and there's like a second of dead time, you get to the station, you're like, oh, this station doesn't have anything on it. You move on.
That's true.
We have to put every second has to have talk.
The worst thing in radio is dead air,
Yes.
for sure.
Speaking of which, Adam,
We'll
Yes.
fill it with dead air. The insurance industry
With
is
dead
dead
air.
air.
Yeah, that's darn close.
Where would you like to start? Rates are going up.
So, well, let's talk about this. So they had a special session. Let's
Yes.
talk about why, because you live this, breathe this, sleep this every day, which is why you've not been here for the last couple weeks.
Correct.
So let's talk about the craziness in your world that led up to the requirement for the special session and what came out of that.
So, there's a myriad of reasons why our rates have been going up, right? And they like to point fingers in every other direction. And honestly, a little bit of everybody's to blame, right?
I got one word.
Go for it.
Greed.
Yes.
And
On all sides.
All
by the way.
sides.
All sides.
All
Let's
sides.
not
I'm
throw
just
stones
saying,
in glass houses.
It is all sides. There is greed on all sides.
We're talking over each other.
No, we're fine.
Banter.
Anyways.
Banter.
Yes. So our state has the most fraud, without a doubt. We somewhere in this article it'll tell you that we
I was
account
like,
for
wait, it's in there. It's like
we account for 20%. We account for
I saw it.
8% of all claims in the country and 80%
Yes.
of all legal disputes with insurance.
I saw that.
That's lower than I would have thought.
So that explains part of why they blame attorneys. Now, part of that also is because sometimes they're needed. I mean, I've had several clients that had Hurricane Ian claims, and I referred them out to Donovan and Danahy and Herman and Wells and a few other people that are in that type of space because, listen, we're sitting here, it's December, that storm hit in September, and people are getting the runaround, they're not getting any money, and I personally I personally try to stay out of that, but if it comes to a certain extent, I'm like, listen, I'm not a claims adjuster. There's nothing I can do that's going to change anything. You need to call a professional because that's what's going to actually get some action going.
So, Adam, yes, it's hurricane stuff, but Leo, if you remember in Ybor City, and we both know the attorney working on this, you had a roofer that dropped a bunch of shingles on top of a house. An old historic house, which
is no longer there.
Can't sustain that,
Yeah,
the way it's built.
Now, that doesn't have anything to do with homeowners insurance.
No, but the point is they did not pay the claim, so you had to get attorneys involved to actually, say, no, the roofer did this, and it requires experts like Leo and all that sort of stuff.
Well, that would either be their general liability or their professional liability, however they want to
I wonder how much of that 80% South Florida.
Well, here's another interesting fact. And GAF, which is a shingle manufacturer, says that roofing consists of 5% of all construction in the United States. But it consists of 95% of all litigations dealing with construction in the United States.
Listen, I agree because I have seen too many of people making claims on their roofs. When your roof is old, you should be saving money to replace your roof.
Well, let's face it. If you have a roofer that knocks on every door in your neighborhood and says, "Hey, I can get you a brand new roof for free through the insurance company," That's not how insurance is set up. So if you've got a free
Right.
roof, congratulations, but
And if
I don't
it's-
want to hear any complaints about what your rate is, because basically your rate is reflective
why.
of your brand new roof that you got.
But the point is, like, if it sounds too good to be true, it probably is. That
Correct.
basic common sense thing. But this is a huge part of what's leading up to it. And I've said all along, and I think you agreed with me, Adam, if they just appreciate the life expectancy of the roof, it's simple.
They could, and I agree with that. But however, the problem is that you're going to run into with that is the same thing as people with hurricane deductibles. They don't understand what they need to have in savings to pay for these things, because let's face it, if a hurricane deductible is 2% of your dwelling limit. I save money, but I don't know a lot of other people that might have 10 grand. 15 grand,
That's a homeowner education thing. It's not an insurance
just to
thing.
be able to spend on and you don't know when it's coming either, so you got to have it backed up. Yes, sir.
So with all these people, with the rising interest rates, the cost of inflation, bread is twice as expensive as it was a year ago. They're living paycheck to paycheck. They're not going to afford a hurricane deductible.
They're not, which is going to be really interesting. They can't pay for half a roof, right? And that's the problem.
Let me just share a basic little, I say this all the time to my homeowners in the field, and I said this to my daughter and my son, my older two that own properties. Here's what I tell them, and this is a very, very basic rule of thumb. Let's say your payment is $1,800, right? Your mortgage payment's $1,800. When you buy your first home, go open up a separate bank account. And then if you're paid, say, bi-weekly, take $1,000 every 2 weeks, transfer that into your home mortgage account, and have your bank draft that account for the payment. If you just round up a little bit and you keep all your house money in that, and a lot of people are paid bi-weekly, guess what? You're going to have some extra weeks in there and a little cushion. If you just leave that money alone and you never spend it, you will have that hurricane deductible.
Right. Yeah.
Simple.
Yeah.
Right? It's a simple little concept and strategy, and it keeps people out of foreclosure.
You think it's simple, and that's why we're a money talk radio show.
Right.
It is simple.
Well, it's
people just don't do it.
It is, but you got to, when we just talked about all the things compressing you from a cost standpoint.
But once the money's spent, it's gone.
I understand that.
Sunk
but
cost.
Let me
Sunk
finish.
cost.
Let me finish. Joe will be
ahead.
proud of us. So if you're getting all those pressures compressing your available funds from the outside, and we live in a city and county where there's a lot of growth and costs going up everywhere, and your probably raises year to year aren't meeting those costs, you might be struggling to maintain the lifestyle that you had 5 years ago even with getting raises, and that's the sad part of it is, if your pay is not being increased commensurate with the outside forces, there's not anything you can do.
Goes back to the only way to control your housing costs is to own. Insurance is going up, but it's the best way to control it.
I want to hear more about the special session.
So the special session,
It's coming.
there's some good things and bad things in it. I think one of the good things is the Florida-backed reinsurance that they're going to do. So it'd be $1 billion available for reinsurance, and reinsurance.
So what does that mean? They're carriers?
Reinsurance is insurance for the carriers for catastrophic events. And when we had a lot of
the insurance companies, is that what you're saying?
Yes. Let me finish. So when we had a lot of back in like 07, 08, when you saw those new carriers coming into the market, and we had 10 years of no storms, reinsurance rates plunged, right? So you had all these carriers that were starting, and they were able to buy all this reinsurance at very, very low cost. Reinsurance rates start going up. Then we get storms. Then it starts going up because of the storms. And now what used to cost them, $3 million a year costs them $30 million a year.
Are you saying reinsurance like renewing a policy? Is that what you mean?
No.
No, reinsurance is insurance for
What are
the
you saying?
insurance carriers.
Oh,
so
got it. Okay.
It's for
To
catastrophic
keep them
events.
from going insolvent.
It basically,
No, it's for catastrophic events. So it's like
Okay.
hurricane hits. Their deductible is probably $50 million. After they've paid out $50 million in claims, the next there's a layer of reinsurance that'll pay all the remaining claims, and then usually it's layered with 2 or 3 tiers of reinsurance.
Who underwrites that?
Insurance for the insurance.
Usually people in the
so this is
And
where the
Bermuda.
greed part fits in. Insurance companies have higher deductibles on these storm events, and they actually are paying out other people's money. So it's actually sometimes easier for a lawyer to settle a named catastrophic event
Correct.
because they're playing with not their money.
So we were talking about the roofs and everything before. If all those roofs that got replaced were part of a hurricane and not part of just wind events, we probably wouldn't even be in this situation right now that we are in. So think about that. So if it happened from a catastrophic event, they would have had coverage for that, and they wouldn't have just their reserves have gone down. Right. Now, part of the other side of that, too, and I'm going to bash the insurance carriers for a second, is when when all those companies were coming into the state and profits were up because we didn't have storms, everything else like that. You had CEOs that were making $25 million a year, $30 million a year, siphoning off money here and there. And it's like, okay, yeah, that's great. And you deserve to make more money when we're profitable. But, if you're eating into your reserves with that kind of stuff at those you're running an insurance company, not the Disney Corporation. Maybe you don't need $30 million a year, right? So, that's the other side of it, too.
Yeah, I would disagree with that entirely. What about Citizens? You want to touch on that quickly?
So they're going to force people to have flood insurance if they have Citizens. So
even if I'm not in a flood zone?
Even if you're not in a flood zone. So that's going to be...
Did that pass?
When we come back, we'll talk about that.
Right.
I tried to read to see if that passed or not, but that will be a huge problem.
If you want more information on anything we're talking about, we're at 813-377-2775. We can get you an in-depth conversation on it. We got limited time on air, but our off-air number, 813-377-2775.
And welcome home. This is Tampa Home Talk. I'm Adam Talley with Talley Insurance, and
taking up the whole hour on it.
Right, we're just going to dive right back. Well, it's important.
It's a lot, yeah. And they're doing a week-long special session.
Right. Before we left, we talked about the people being forced to buy flood insurance if there was Citizens. Now, that would roll out slowly year over year, and then obviously new business would be part of it. I haven't seen anything come out yet that says yay or nay on that. However, that's the reason they're doing that is twofold. One, it's because Citizens is so far below the average cost of homeowners insurance that's why they're over 1 million policies, right? They're growing more and more every week, every day. And if you're forced to buy a flood insurance policy, even if you're in an X zone, what's going to happen is that combined policy might end up being more than, a private insurer, in which case you would go there instead of with Citizens. So it's trying to force people away from Citizens. Now, if you're a current Citizens policyholder, it was explained to me, now, this is unconfirmed, so take that with, an asterisk, but it's going to roll out little by little based on your dwelling limit. So the higher the dwelling limit, the lower it's going to go. The sooner you'll have to do it. Yes.
This is major logic flaws. I'm not with Citizens for my insurance company because I want to be. I'm with them because they're the only choice. It's kind of like when the electric meter comes out with time of use metering. Mm-hmm. It's like, after I've used 750 kilowatts of energy, I have to pay more for the energy. Well, I don't have a choice. I'm not tracking my energy usage.
Right, yeah.
It reminds me of when I had Citizens for my house, and we had a hailstorm, and I had these perfectly round circles in the top of my pool screen cage, and they said, "Oh, that's not hail damage."
Yeah.
Like perfect size golf balls.
Do you live on a golf course?
No, I don't.
So that's going to be a problem. I don't know if that's going to be part of what gets passed, but that would be a problem. One of the other things that they're talking about, and we kind of hinted at attorneys before, is they're going to stop one-way fees. And basically what that means is the insurance carriers, on top of what they're paying for your claims, are paying the attorney's fees as well. This would eliminate that, and you would be paying the attorneys yourself out of what the insurance company gives you for your claim. So think about that, which is not necessarily in the best interest of a consumer.
It's
but
already
it would
set up that way.
Which one are you talking about? The assignment of benefits?
No, the one-way attorney's fees.
Oh, got it. Yeah.
They're already set up that way. I mean, I had my Irma claim settlement. It was like $65,000, and the lawyers took $35,000 of it. So I mean, it's already set up that way.
Well, did you only have $30,000 worth of damage?
No, my estimate said $200,000 worth of damage.
Interesting. Well, anyways, that's what they're talking about with that. Assignment of benefits, eliminating that.
I agree with that.
It would help.
I do agree with that.
The thing with assignment of benefits is it just got abused, right?
Absolutely.
It was originally intended to just help the consumer with the claims process. But what happens is a small percentage. I'm not blaming all contractors, of course, but what used to be a $2,000 water claim turned into a $10,000 water claim.
I strongly disagree with getting rid of assignment of benefits. In every other facet in life, if you don't know something, you hire an expert to assist you.
Correct.
Assignment of benefits takes that away.
But I think you should pay for that expert directly as opposed to assigning the rights to make a claim on your policy, and that's what that is.
The filing a claim on your policy, to some extent, is a legal matter. It's a contractual dispute. And if you're taking away people's ability to get experts to help them, and I'm not even talking like expert like Leo does, inspection expert, like experts in the field to help them and assist them through the claims process who do this every day, day in, day out, you're disadvantaging the homeowner and you're making it easier for the insurance companies to lowball and take advantage.
I think you could pay someone as a job to do that and they would get a lot less of the cut in between, which is part of the problem.
Yeah. Well, and
right?
Yeah.
I mean, you have to look at it from a whole. Like one of these things talk about the insurance companies having 2 straight years of net underwriting losses exceeding $1 billion a year. That is not sustainable. So you've got to, when you look at losses from anything, any company, and a lot of people are in this boat right now where they're cutting expenses, including me, you have to look at everything.
Right.
And cut out any type of fat. And I think assignment of benefits was widely misused.
It was.
And about this $1 billion losses, we just talked about CEOs of insurance companies get $25 million. I
don't agree with that either.
That's 2.5% of that.
Yeah.
Listen, that's part of the problem.
That's substantial. 2.5% of $1 billion is a lot of money.
It's a lot. Now, do you want to know the sad part about all of this, whether it gets enacted or not? Is all this might do at best would be stabilizing it. Now, stabilizing the current carriers that are there.
12% of people in Florida don't even have insurance now.
I don't disagree with that.
Nationwide, it's only 5%.
Yeah. Now, what it might do, the positive of all this, is it might make Florida more attractive for other carriers to come back in.
I doubt that.
Not right now.
Here's the thing.
I don't see that happening right now.
Here's the thing. The current carriers that have been in the state for a while, all those claims, whether they're true or fraudulent or anything else like that, they have to keep reserves on those. Mm-hmm. So that's why, if a new carrier came to the market, they wouldn't have all those claims reserves that they have to hold on to, in which case they might be able to offer a more competitive option, which is really what you're looking for. Right now, you got people stuck between a rock and a hard place. Like, okay, your roof is 15 years old, so your option is to stay where you're at for $8,000 or go to Citizens for $5,000. You're going to go to Citizens, right? It's not even a question. So that's what they're trying to do.
So we really don't ever talk politics on this show, and it's not the purpose of what I'm going to say right now. But
oh boy,
in this article, it says House Democrats argued that lawmakers need to address the rate increases, which I agree, and push for a national catastrophic risk pool to ensure that homeowners are better educated on their policies and reduce dependence on Citizens. Now, if we had a national catastrophic risk pool, that makes sense. Think about it. Everywhere you live, you have something. If you're in California, you have wildfires, right? And then people say, well, I don't want to pay for California's wildfires. And then hurricanes, in Florida, and people say, well, I don't want to pay for Florida's hurricanes. Well, what about if you're in the Midwest and you get tornadoes?
The only problem with that is, as much as people don't fully understand this, and it comes up every electoral college discussion with every election, we are really 50 separate countries.
Right.
That are loosely joined together as one nation. So
how do we fix the problem in Florida?
We don't. It's
in
the
your
Federalist
opinion?
Papers.
It's the Federalist Papers.
We can't undo that.
I'm just saying, what's your fix?
I think we're trying to go to the moon.
Yeah. We thought Elon Musk was crazy.
We just want to send more billionaires into space.
Right. So anyways, we'll see what happens. You got to also understand, anything they enact, it takes 3+ years to even see any effect.
So what are we going to do now?
You're going to hopefully pay your insurance premiums.
I disagree with that. Senate Bill 4D went into effect immediately, and that took less than a year to put in place. The My Safe Florida Home program that we're a part of for these free wind mitigation grants for people, or the matching grant. I mean, that went into effect in less than 2 months. So they're moving fast on this stuff.
Insurance is not a priority.
Well, what I'm saying is, from the carrier side, to see a difference to where it affects the rates.
Oh.
Right. So, like, you got to think they need to see a difference probably for a year or so to consider a rate change in a different direction. Then it takes a year or so of product management to run the rates, figure out what is feasible, that kind of stuff. And then it gets enacted in the third year, so maybe new business sees it, but then you have a whole year of renewals that it has to process through.
That's
so that's
about
why
right.
that's why it's a longer process.
We had all those back-to-back storms in mostly 04, right?
Mm-hmm.
Some in 05, and then the carriers didn't start coming in until 07.
Right.
So that makes sense.
Yeah. Mm-hmm. So it's a mess.
What else is on here? There's a few more things I think we didn't talk about.
We got most of it.
I think we're good. I think we can talk about now buying an insurance company.
Well, one of them was
an agency.
requiring insurers to respond faster to claims.
They
Remember,
need to.
that's one. Tightening insurance companies, requiring them to send adjusters within 7 days. That should be realistic as well. And then exempting property tax homes destroyed by Hurricane Ian and setting aside $750 million for various restoration
And
efforts.
this is a good example of a bill that no one is thinking about how it can be enacted. So you have to respond within 7 days of a claim after it's created. There were 350,000 Ian claims filed within a week of Ian hitting.
All they have to do.
You don't have enough people to do stuff like this.
They just have to do exactly what the power companies do and send the people from all over. That's what they did. We had power guys from the Northeast and all over. Did you see the number of power trucks down there?
The problem with that is your people that work for you, for your company, that's a fixed cost. You bring in people from out of state, that's an unfixed cost. So what costs you $50 an hour, and that's high end for a claims adjuster, it's going to cost you $150 an hour for somebody to come from out of state. So now if you want to talk about claim costs shooting way up, that's what you're going to see.
Then I guess they're going to pay their people overtime.
The other thing you've got to consider is the insurance adjusting based on pricing and based on softwares that these people from all over the United States might not know. When you have the power company, you have a distribution construction standard.
That's right, because you can talk on this topic.
Because I did design in this, and you can actually design power grids anywhere in the United States. Mm-hmm. Based on this DCS, distribution construction standards. So you can have contractors from all over the United States doing the work because it's the same everywhere, and it's not the same on the adjusting side.
Right. Or in insurance in general. That's why you have to have a state-specific license. Mm-hmm. So, like, I couldn't sell you a policy in Georgia because I'm not licensed in Georgia.
Georgia's a whole different animal.
You wouldn't want to be licensed in Georgia.
I probably wouldn't be. But see, if you live in a place like Tallahassee, right, you're very close to Georgia, you're very close to Alabama, you would probably be licensed in all 3 states.
I tell you what, though, going back to what you said about each little state operating like its own little country, so true. Because, for example, like just from a title perspective, if you go to Georgia, they are
not. Let's talk about Georgia.
They're not a lien theory state. They're a title theory state. So title theory, you don't get a deed until you pay off the house. The foreclosure process is much, much quicker. It's completely different.
Oh, so you don't own the house until it's all paid?
No, you don't. It's like a car. You don't get that deed until you pay it off in Georgia. Here in Florida, you get a deed right away, and they lien your property via a mortgage. So Georgia is very much a title
Are
theory.
businesses
Pay your bills,
like that
folks.
when you buy a business? Is it the same way?
That's a good question for Tom.
No.
That was a resounding no.
Well, when we come back, we're going to talk to Tom Brubaker at Tambay about why investors should buy a business in this market. We'll talk about some of the trends that he's seen and a little bit more. That is enough insurance talk this hour to make our heads spin. And you do it for a living. 813-377-2775. That's our off-air number. If you got some questions or you're listening to Tom and you want to inquire about parking your cash somewhere like a business, 813-377-2775. That's our off-air number, and you can call or text us to get more information on buying businesses in this market. And I'm sure Tom even has a few he's going to talk about that are selling. So this is Tampa Home Talk. So glad you joined us this week, Adam Talley.
It's like an apparition.
With Talley Insurance, and I wasn't sure if you were going to make it back, Leo from New York, but here you are. And so we'll be back right after this break on Tampa Home Talk. Stick around.
Awesome.
Welcome home, Tampa Home Talk. We've got one exciting segment left on how to buy an insurance company.
No, that's not what Tom's
I thought that was what we were building up to this whole hour.
Is that what you're talking about? Do you have insurance companies for sale?
Actually, there aren't many insurance companies for sale. They're extremely high demand.
Really?
Yes.
God, you wouldn't think anybody would want them.
An agency is high demand? Or
Agencies are high demand.
Wait, Adam, come back.
Well, actually, that makes sense because if the fastest way to get more licensed people is to buy someone else.
It's the residual income. They sell the book of business.
Yep.
Yeah, it's already there. Yeah, it makes sense.
Yep, exactly. So people ask me, why would I buy a business in this market? Well, what's making money today? You're not going to put your money in the stock market. Stock market's doing terrible. Crypto is a house of cards.
Oh, my gosh. Crypto. Whew. And FTX.
So where else would you put it? Okay, commercial real estate's a great investment, but there is no multifamily. The REITs and the hedge funds are buying all the good multifamily.
Yes, they are.
Retail is not out there, and the number one commodity in commercial real estate is industrial. There is no industrial property.
For a while.
So it's extremely tight. Now you can buy a commercial building for $1 million, and let's say it's a 6% cap rate, you'll make $60,000 for your rate of return. But if you buy a business for $1 million, you'll make $350,000 the first year.
Nice.
But that's with you in it, right? Operating it or not?
No, that's with low owner involvement.
Okay.
Yeah, too low of owner involvement, the business runs apart.
Well,
think
that's
I
the
agree
thing.
with that.
Now, I will say this. The businesses that require very little owner involvement will sell at a higher multiple, but they are out there. Now, the owner has to be there to keep people honest, and we have a lot of businesses like that. The first thing I do when I list a business, I tell the seller, replace yourself. We talked about that before. You have to find a way to replace yourself, get yourself out of the business. They don't always listen to me, but when they do, that's when it's worth a lot of money. Mm-hmm. We call that mailbox money.
I'm still trying to figure out how to replace myself.
Well, see, the thing you got to think about, though, is like in a business like yours, which is small,
Yes.
you can't replace yourself. In a business like mine, I have a lot of it automated. Like,
You stepped out a while ago.
I stepped out a while ago, and that allowed me to go chase this state contract for the wind mitts for the
Yes.
My Safe Florida Home, which I'm now very involved with. But every week that goes by, that gets more and more automated.
But you're the rainmaker. Like you go find, and that's what I think where my gift would be too, if I could get out of my own way.
Well, see and that's the benefit of buying a business. A rainmaker will buy your business that runs itself, and they'll grow it.
Exactly. There's people that do, that's their living is they go and they buy businesses, they fix it up, and then they resell them. Mm-hmm. 3 years, they double their income, and it's a great way to do it. Now, we look at people's experience. First thing I ask a buyer is, what's your experience? What have you done in your prior life? Find out what they like to do. And then we put them in businesses that don't require special licenses, contractors' licenses, things like that. So put them in, and works pretty well. If they have management experience, if they have cash, that helps a lot too. We use seller financing. The SBA is going to require the buyer to have experience in that business or experience running a business.
Well, the other thing with SBA is some of their loan programs say that if you buy a business, that former owner needs to get out.
The SBA will allow the seller to stay around for 1 year. Mm-hmm. And they can't be an employee. They can be a consultant. Now, whatever they work out after that, I have no knowledge of.
Right. Which sometimes they do or need them or, it happens. So what kind of businesses do you have for sale right now that you think are a great opportunity?
We currently have 24 businesses for sale right now.
What are they?
All shapes and sizes. I have a lot of off-market stuff, too, things I've been working on.
That if you had a buyer would be available?
Yes.
Got it.
Biggest one is a pharmaceutical manufacturing business.
Ooh, that's a good one.
Sounds like a weed company.
Maybe.
They make $3 million profit a year, 2-shift operation. Pretty good sized business. And then they go all the way down to restaurants. So
yeah, I would not buy a restaurant personally for anything. I'm not that girl. If somebody is, I'm not.
Right.
You already work 20 hours a day. You'd be perfect for a restaurant.
Yeah, no, I'm not.
But let's segue into this a little bit. We have a lot of resistance in people wanting to do it on their own, the sellers. They don't like to hire a broker. And it's like, well, if you're going to sell your own house, You still have to hire a broker because there's a lot of moving parts to that. But selling a business really has a lot of moving parts, requires a lot of expertise. There's a bad rumor that businesses are worth 3 times their net earnings. That's not true.
Well, what are they worth?
It depends on the cash flow and in that industry.
Okay.
So most business brokers have an accounting background. So we crunch the numbers, determine the true owner benefit, and then we can look at similarly structured businesses that have already sold, and we look at the net earnings to the price paid to determine the multiple.
Do you have any construction businesses for sale?
I do.
What are they?
I have a pool construction business in Pinellas County.
Ooh.
It's doing very, very well. He builds about 200 pools a year and remodels. That is for sale for $1.9 million.
Okay.
I'm coming close to a contract, but we're still a few $100,000 apart.
Okay.
He makes about $500,000 net a year.
Wow. Okay.
He's doing about $1 million a month in sales. So very strong pool business. That's Pinellas County.
Yeah, pools are still hot right now. I've said that for 2 years. It's like the hottest commodity on the market in Florida right now.
And I have a home builder on the other coast for sale. He's expanding and going crazy. The home builder, he had to start a truss company because he couldn't get truss anywhere. He had to start his own truss business just to build his own trusses.
Talk about that.
We talked about you having the whole design thing for the
Yeah, we
trusses.
had like conventional framing came back from the first time since the 1960s because they couldn't get trusses.
So what's your take on that, Leo? Do you think those are built better with the conventional, like the stick framing with the trusses? Or
I mean, if stick
What's your thought?
framing, if you use the gusset plates and you're using your Simpson straps, they're just as strong as the trusses. The benefit of trusses or anything prefab is it comes and it's much faster.
Right.
You just kind of bloop bloop and you're
Which
good to go.
Hasn't been the case in the last year
Yeah,
and a half.
and that's where people went conventional or made their own truss companies. It became faster to do these other methods.
Makes sense.
And they build them on site. Mm-hmm. I've never seen it, so that's what they do. This
That's how
guy
they
has.
used to do it, like you said, in the 60s. They used to build it like that.
This builder was awarded a 300-unit apartment complex he's building. He's doing a 16-unit townhome development and a 33-home subdivision. He also does engineering.
Wow. Well, if you're looking to buy a business or you know someone that is, or maybe you're ready to sell your business and get out while you think you can get a really good amount, might be a good time to talk to Tom. Our off-air number is 813-377-2775. 813-377-2775. Any final thoughts, Leo, before we wrap up this week?
No, I just every time he comes on the show, I want to buy a business.
I know, right?
I know. I'm so excited.
You should buy something. All right. We should list them like lowest to highest or something the next time we come. That's what
Top
we'll do.
10. Top 10.
Top 10. We got it.
I like Adam's recap of his favorite 5 and his 3 dislikes was a good 5-3 segment.
All right. This is Tampa Home Talk, and love where you live, or we're going to fix it. Welcome home. We'll be back next week.
Love where you live.